Our trade on Walmart expires today, November 15, with more than 400% profit. And because we detected more unusual option activity, in this video we will be showing how we updated our trade to manage the risk, because Walmart reports earnings next week, November 19th. And so if you've been following our channel, you know that on this day we detected unusual option activity, August 30th. And we shared the video here on our channel. This is the title 2 months ago, where we analyzed $1.5 million. And we concluded they were buying and going bullish on Walmart and that it would go higher, which it has, because you can see this week it hit a new high again. And so if you are interested in this video, we'll put a link at the top here. If you missed it, make sure to subscribe and hit the bell icon so you don't miss out on these very profitable opportunities. Now, how much profit did we make? Well, if you traded the stock, you can see that ever since then, those unusual options on August 30th, it has continued to move up higher, all the way to about 9.46%. Our option strategy, you can see here, we have a profit of about $356 per trade, and we spent $79 per trade. This was the strategy here. It expires today, November 15. And you can see that the profit percentage of $356 of profit divided by the cost of 79. This graph already takes into account the cost of the trade, because as you can see, if it had gone down, it would have been a negative loss of 79. Okay, so we divide by 79, cost of the trade, times 100 for percentage, and you can see we have made 450% profit on this trade. And so you can see how much profit we could make with just one trade. And that is why diversifying our portfolio with these types of trades increases our chance of profit, especially if we use stronger data analysis that we share on our website. If you are interested in those, make sure to go to our website. We'll put a link at the top here where you can gain access with more of these trades based on stronger data analysis, so that even if we do have some losses from other trades, we will have trades that exceed 100%. Because a trade like this, 450%, means that we could essentially have 4 losses at negative 400%, because our max loss per trade is 100%. We would still be up 50% gain. And so that is why diversification is very important. And that is why how much you gain when you do have winning trades and how much you lose when you do have losing trades is a lot more important than your win-loss ratio. So make sure to go to our website if you want to diversify and get more trades that have substantial gains like this one here. Now, why is this trade so profitable? Well, if we take a deeper look at this trade now that expires today, you can see here that they are very deep in the money. These November 15 options at the 80 strike calls, you can see how much they're worth now in comparison to when we initially shared the trade in our video. These 85 strike calls that we sold, you can see we are still in some of these positions. We can buy these back to close out of these for very cheap, and we can sell our calls that we bought here for a lot of profits here, $445 to $460 back to the market per trade. And that is why these are very, very profitable. And so we started to manage this trade now because of the new data. And so what is the new data? Well, let's take a deeper look at the option tape. You can see here that on the last trading day, there were 9,000 contracts being traded all at the same time, November 14, for these November 15 options at the 80 strike calls and the 85 strike calls. And December 20 options at the 86.67 strike call and the 95 strike calls. And based on our analysis, this is what they were doing. You can see here on the option chain for these 80 strike calls, which we also traded, They are taking profits, closing out of these trades, which we started doing too, and they are rolling their strikes to a higher strike and a further date out to the December 20 options, all the way to the 86.67 strike calls. We are now in this new position here, and the 95 strike calls. You can see our position here. POS stands for position, green means buy, red means sell, because we also bought these call options at the 86.67 strike call, and we sold the 95 strike calls for our new trade. And so when we analyze this new trade, you can see that the cost of this trade is $174 of debit. But remember, we rolled and took profits from this trade, and so we need to factor that in. And so our new trade here actually is a credit trade, because the profit that we made from the previous trade is a lot more than the cost of this current trade. $356 of profit, we need to calculate that in. And so we have a credit trade of $182 per trade now. And so this is our new trade here. This is a credit trade, which means that if Walmart goes down for earnings, notice there is no negative loss. And if it continues to go up, you can see we can continue to make more profits. And so we are now in a no loss trade. We've eliminated the risk from earnings. And that is how we manage our trades, to make sure we consistently stay profitable and beat the market. If you want to learn more about our strategies on how we do this, make sure to go to our website. We'll put a link at the top here. Make sure to watch this video when we entered the trade, so you can learn in hindsight how we were able to make 450% profit on this trade. Let us know in the comments below. Do you think Walmart will continue to go up higher, or will it crash back down? As usual, please smash the like button, subscribe if you haven't. Take care and have a wonderful weekend.